May profits be upon you. Welcome to another weekly Forex forecast. We're looking at the euro. All right. We're looking at the euro versus the US dollar. All right. Let's look at the economic calendar. We don't have anything this week pertaining specifically to the euro, but we do have its counterpart, the US dollar. It's going to be a volatile week. All right. We have ISM manufacturing information coming over. This is EST times. All right. At 10 a.m. on Monday. On Tuesday, you see that we have the JOLTS job openings. These inject some volatility into the markets and will help us to gauge which direction the market really wants to go. We have Wednesday coming up with the Fed chair speaking at 1:45 later on the second half of the day. But in the beginning of the day, we have the ADP non-farm employment change. All right. That's going to, those Monday, Tuesday, Wednesday will be tradable days, in my opinion, with some good volatility to allow you to, uh, you know, just follow some trends anyway. All right. But come Thursday and Friday is the big day with non-farm payroll coming up, NFP. All right. This is the kind of news that has the potential to reverse markets, like CPI, like interest rate decisions. All right. Those are the days. Those are the trading events you want to avoid. Those are the days that you may want to avoid until the dust settles. Okay. Thursday, the day prior, will will probably go in the opposite direction of whatever direction it takes after the news on Friday. So Thursday, Friday can be kind of unpredictable. Not the best time to trade. Those aren't the greatest trading environments, in my opinion. All right, especially for inexperienced traders, you want to be careful of those days or avoid them altogether. And uh, you can be gambling during that time, depending on your experience level and all. All right. Now, for on the monthly, we can see that price went into this range. All right, stayed in there for a long time. All right, 2003. All right, till today. All right, and then what do we see? We see price closing the month below this range. All right, that's a very bearish indication. We had a swing fail. It never took out the prior highs. It did not take out the prior highs, and this seems to be heck bent on going lower. Here's the deal, though. All right, you see this big rejection down here. All right, after this price takes out that low, after price takes out this, come on, man. Why would you do that in front of company? All right. Uh, when price takes out this swing low here, uh, you would expect a pullback of sorts. All right. And to be coming. And it is coming. But where is it coming to? All right. I like to see price come back to the area where it broke out. All right. And we are headed that way. So the next candle is what I'm looking for. If I can get rid of that, if the next candle, what I'm looking for is a candle like this, where there is um, a low open. Dang, I thought I had it right. A low open and a high close. Come on, man. Oh my gosh. What was that about, really? All right. All right. So something like this. That's what I want to see here. I want to see price come up here and not come past the 50% of this candle. All right. So, if we're going to put a fib or something on it, we can look at it like this. I don't want to see price come past, uh, with a wick that low. All right. Otherwise, it's just going to be very bearish. And what will be pulling it down there? That would be the US dollar, wouldn't it? All right. Because it's weighted against the US dollar. I'm looking for price to continue this pull up. All right. The buyer stepping in and defending uh, this protected low. I'm looking for price to pull up a little and give us a and likely give us a bearish fair value gap in which to use to go for lower prices. And we have some confluences here where we see price intersecting the lows. The lows are intersecting that what do you call it? Potential formation of a bearish fair value gap. This imbalance here could be intersected by that low, and I would like to see that because that's a that's two confluences. All right, that we may get lower prices to come. All right, do I think that price is going to pull back up into the range and all that good stuff? I don't think so. I think we have a lot of momentum to the downside. Then we see price pulling back already. Yeah, I'm looking to see how this develops because I already put out a video already about the US dollar and the US dollar index. And I think we're going to see some short term bullishness, which would mean short term bearishness for the euro. Now, look how we are on the weekly. All right. What are we in? We are in a bearish. Uh, we're not quite in the bearish fair value gap as yet, but in its counterparts, the pound has already seen a bullish week go into that fair value gap. And if we look at it on the US dollar, look at that same area on the US dollar, which is the inverse of the Euro USD. Let me go up. All right. You see that we are in a bullish weekly fair value gap. All right, from which price could potentially go higher from. All right, if this fair value gap does not hold on the weekly, we're going to continue this pullback, which has already started. This is the start of a pullback. Let me tell you that right now. Even if we get short-term bearishness or bullishness in the U.S. dollar, I do believe that we are going to continue down. Okay, and with the euro, sorry, with the euro, even though we have this, the week has, what do you call it, ended on a bullish candle, it is inside the previous weekly candle. All right, this is an inside bar. This is this is one of the indications that there may be a shift in the market from bearish to bullish. Even if it's short term, this inside bar kind of gives you the story, gives you a clue as to which way the market is going to go. So I do think that price will be going into this uh, this imbalance here, this bearish fair value gap, and I think we may see a price continue lower, but probably not lower than that low. We'll see. We'll see. But I think we may have uh, an A, B, C correction heading up, and probably, you know, we're going to probably end up around here. All right, which is where these swing lows are intersecting a bearish fair value gap here. But that's going to come later. That's going to take a while to get there, maybe a week or two. All right. But I think in the short term, we may see some short term bearishness to be followed by bullishness in the euro. Let's look at the daily, shall we? So we can get a clear picture. And that arrow's still there. I don't know why. Now, you see how we have this one. Look at this. A, B, C, 1, 2, 3. Okay. Look, I want to see this broken. That'll let me know that this is a pullback that is starting a bigger pullback. All right. If we get a bullish, sorry, can I get that back? All right. If we get a bullish break of structure here, all right. Let me see. I don't have that, do I? Yeah. If we get a bullish break of structure here into this weekly fair value gap, I'm looking for price to react. All right. I'm looking for price to react. quite possibly, come on, man, quite possibly to the middle of this fair value gap. All right. And then we get a push down. This is going to be a short push down, I believe, because once you break structure to the upside, we're bullish. All right. And I think this will be the indication that we are. I need to see price trade through that high, though. I don't want to see a wick through. I want to see it trade through with a close above towards the middle of this fair value gap. And then we're going to see that what do you call the reaction, and then I think we're going to break this uh, bearish weekly imbalance, and like I said, probably come and challenge these lows here up around here. All right, there is an aligned order block here as well, and with a volume gap, which price loves to react to. So that's where I'm at on this. Okay, inside bar. I think we got a change coming. A change gonna come. All right. I think we're gonna. I think we have some clues here that tell us that maybe we see the short-term bullishness here, which would mean that we would see some short-term bearishness in the U.S. dollar, and then a short push down. All right, which would coincide with NFP, if you ask me, and then we can start. Uh, we can resume that trek into premium prices versus discount prices. If you look at this range, and this is the equilibrium, this is lined up with the 50% of this trading range. You want to take your longs from discount, you want to take your shorts from premium. And I think we're on our way to doing that after taking out such a very important swing low. Okay. I hope you enjoyed the video. Hit the like button if you like, and if you like the video, and do make sure you subscribe so that you can catch my updates. I always put notes, add notes into my updates, either in the note section or the comment section, but I always add it to the video, all right, during the week. So I'll see you in the next video. Thank you for watching.